Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing J.C. Sandoval, the CFO of Andean Precious Metals, which trades on the TSX under the symbol APM. We initiated coverage on Andean in March of this year, 2025, with a buy rating and $3.50 per share target price. I believe the stock was around $1.50 at that time, and since then, Andean and JC and the team have been moving full steam ahead. Stock has performed extremely well, trading around $9 a share, I believe, and we currently have an $11 per share target price on the company today. JC, we haven't caught up in a little while. Good to have you here.
Thank you, and it's nice to see you again.
Yeah, so with that, we're going to keep it a bit more conversational for this interview, but maybe for the listeners that haven't heard the story, if you could give us a quick sort of 5-7 minute intro into Andean, telling us about sort of what the company has done, where it is today, and then we can get into some specific questions after that.
Sure, thank you, Ben. So, very quickly, a little bit of the history of the company because it's very compelling how we started and where we are right now. We started as our founder had the opportunity to buy what we saw as a distressed asset. We bought from Core Mining, what it still is the largest oxides commercial plant in Bolivia, but we bought it when it had less than a year of life of mine. But what we started doing, as opposed to just focusing on our own deposit, we knew that we saw the possibility of, blending our ore with third-party purchases. And as you know, it's all about the location of where the plant is. There's a lot of players, including artisanal miners, local cooperatives, the Comivo, which is the state-owned mining company. And then that's exactly what we started doing. We started buying, not hauling, buying more ore from third parties, blending it with our own ore. And long story short, it became a big success. So over the next few years, we had a pretty stable production profile, around 5 million ounces of silver a year, very good margins. That allowed us to take the company public in 2021. And by early 2023, we had built a very strong cash balance. We had close to $100 million in cash. We had no debts, no streams, no royalties. That also, and as you can imagine, you'll remember back in 2023, it was a very strong buyer's market, high interest rate environment, low liquidity in the market. So it allowed us to start thinking on making our first acquisition outside of Bolivia. And we spent the year looking and understanding the market. And by the end of 2023, we pulled the trigger on an acquisition in the United States, a gold producing mine called Golden Queen. It's a fully permitted mine producing around 50,000 ounces of gold. It was done at an impeccable timing, man, because when we bought it, we used a $1,900 gold price for that. And well, I don't have to tell you what gold prices are. So for us, the timing of that acquisition was impeccable. So where do we stand right now? We have two good producing cash flowing assets. Between 4.5 to 5 million ounces of silver in Bolivia. Most of it is silver with a little bit gold component. And it's the opposite in the US. It's around 50,000 ounces of gold. Most of it is gold with some gold silver component. So I guess it's one of the reasons why people like, or investors like our company, because we are exposed to both gold and silver pretty much on an equal basis, not only in terms of production, but in terms of revenues, cash flows, and profitability, and so on, right? So yeah, we have those two assets right now, and obviously thanks to where commodity prices are, this year has been amazing. This last 3 quarters, every single quarter, we presented record revenues, record EBITDA. This time around, this third quarter, we presented cash and marketable securities of up to 100. We have 121 million, significant increase from the second quarter where we had 87 million. So not only do we have two good cash flowing producing assets, we have a strong balance sheet. We have $121 million in cash and cash equivalents. About a week and a half ago, we also announced a partnership with National Bank, who provide a new line of credit, a credit agreement for up to $40 million, which allowed me to refinance what I had as we called it a COVID loan, which we had with Golden Queen of $36 million. So we believe this loan that we got from National strengthens even more our balance sheet and builds a relationship with a strong mining bank. So we're very happy about that facility. So yeah, that's where we stand. It's been obviously a great year, man.
Yes, it certainly has. And I just heard a little reverb there. Can you hear me clearly?
Yeah, perfectly.
Okay, great. Yeah, no, it certainly has been a great story, and it's been interesting to see, the acquisition of San Bartolomé down in Bolivia, optimize the project, get it up to a working standard, build out the business model of that line of business, and then, build up your cash balance and make another acquisition in California in Golden Queen, and then from there doing the same sort of thing in terms of optimizing that operation. Of course, you guys are benefiting from the rising gold price over the last year, but nonetheless, you're still working on many different things to optimize that, which we'll get into. Um, but maybe just quickly, because you did mention it towards the end, the $40 million line of credit, restructuring that outstanding debt. Can you talk about the Golden Queen acquisition in terms of the cost, how you guys acquired that project, how really it didn't impact your cash balance much at all? Because I know that that was sort of a notable acquisition in terms of how that was structured.
Thank you, Ben. It's a great question because we were very proud of the ultimate result. We bought this asset, which basically doubled the size of our company in pretty much every metric possible. Revenue, production, obviously, revenues, cash flows, reserves and resources, all of this with while keeping all of our cash and zero dilution to our shareholders. How did we manage to do that? Well, it was mostly through deferred payments to the sellers and the assumption of debt. The deferred payments have been completed, all of them. Everything was paid with the excess cash flow from Golden Queen at the end. So really nothing coming from our own pocket. So from an IRR perspective, this acquisition is almost infinite. And then the assumption of debt, which it started as a $50 million loan, but it's one of those loans that it was funded by the U.S. government, by the Fed, so it bear a low interest rate. So we try to keep it as long as we could. And we started paying it off again with the same excess cash flow from the company. It went down to $36 million, which matured last week or 2 weeks ago. And that's when we refinanced that loan with a new facility from National for $40 million. So at the end, that's why we did not use our stock and we did not use our cash. So, it was an impeccable acquisition. We kept all of our cash and no dilution to the shareholders. We have more cash than what we had before the acquisition, right? Actually, pretty much every single year we have piled up more cash than the previous year. So that's good news.
Yeah, yeah, amazing. Think about it in real estate terms. Imagine buying a house, not putting any money down, and paying
Yeah.
the payments with the cash flow. It's fantastic. So, going back to San Bartolome, can you just touch on how the production has stabilized over the last couple years? Where the project is today. I understand because we cover a couple other sort of ore processors similar to that operation that when rising prices in a environment where gold prices or silver prices and metal prices are rising, that the cost to acquire that ore is obviously higher. Can you just touch on that, how the business model has sort of changed in this rising metal
Yeah.
price environment, and then maybe just going forward, anticipation on how this can continue to be a steady operation?
Yeah, thank you, Ben, because it's important to clarify that in Bolivia, we don't see ourselves as a traditional mine where you have your deposit and you have your plant and that's how you produce. After so many years of extending the life of mine, as I've mentioned, we acquired that plant when it had less than 1 year of life of mine. In 2023, we ultimately decided to stop mining from our own deposit, free up that capacity from the plant because we realized that we could be getting better ore from the different sources we were, sourcing our ore, right? But what's interesting here, so right now, 100% that goes into the plant is coming from third-party purchases. But what's interesting here, Ben, is that I mean, this is a moving target, obviously, right? But right now, around 60% of what's coming to our plant is coming through spot purchases, free on board spot purchases, as we say it, right? Where we pay the ore based on market prices, right? So we are, yes, in high price environments, the company is less profitable, but it's still a very profitable business because we always go for that margin, and that's irrespective whether the prices go up or down. My guidance that we have presented to the market, that our expectation is to have between 35 and 45% margin. So it's a pretty good sizable margin. And in a high price environment, yes, I mean we're paying more for the ore, but there's also more sources because people are more interested, right, in selling the ore, and we can get actually better ores with better grades. But also when prices go down for us, it's less relevant because we will be paying less for the ore, and we would have that 60% right now that goes into our plant is coming from those spot purchases where I am less exposed to commodity prices, but it's still a pretty, between that 35 to 45% margin, it's still a very profitable business. The remaining 40% is mostly coming from long-term contracts where those contracts are set based on a fixed price per ton. So there I am exposed to commodity prices, right? Mm-hmm. So what's interesting is the combination of both being exposed for a certain percentage of our throughput and the other 60% or 40% where we're not, still make this a very profitable business, but less risky overall because we have that natural hedge on the spot purchases, right? And we have proven this business model has been very profitable for us. And on top of that, we have our U.S. operations, right? So I guess investors, that's what they like about our company. It's that, we have a processing complex in Bolivia and we have our mine in the U.S.
Yeah. Yeah, well, no, and the business model makes a ton of sense. From you still you take part in the upside of in a rising metal price environment, but you're very much hedged to the downside, and you're hedged to the downside more than you miss out on the upside, in my opinion. And that's where, especially when gold has already, doubled in the last couple of years, people might want to, reduce their risk to the commodity price environment a little bit, and Andean can offer that. The third-party purchases, so can you just touch on the supply of that, or is it infinite? What does that look like? Of course, typical producers need to drill and explore and find resources. So can you just talk about that supply network?
Yes, it's a great question. And the way I like to always answer that, it's all about the location of where we are. We're right next to the city of Potosí, where the Cerro Rico is. This is a very rich mining district where they've been mining for many, many years, I think over 500 years, right? And there are a lot of, like I said, a lot of different suppliers. We have Conmebol, we have local cooperatives, we have artisanal miners, we have other private and public groups. And let me give you this example. We just signed a few months ago, and this was announced to the market. We signed a new contract with Conmebol, with a state-owned mining company, for up to 7 million tons of ore. I mean, that contract on its own could be years of production. There's still a lot of work to be done. We expect first production from that contract to come in sometime early next year. But this is a good example of what we can accomplish in Bolivia, right? And that's only with Comibol, but then you have all the other players that I already alluded to. So yes, I mean it's ultimately it's all about the geology and the potential that the region has, and nobody questions that. It's the potential is there, right?
Yeah, yeah, absolutely. And at higher metal prices, there's that much more profitable ore to be mined, right? It's probably doubled in the last couple of years. Um, so pivoting over to Golden Queen, we talked about the acquisition. Maybe we can just touch on, and we don't need to get too into it, but what has Andean done since acquiring Golden Queen, which was previously run by a private company? Of course, a private company doesn't need to disclose to the market. There's a whole bunch of ways that they would run an operation that is different than a public producer. So maybe you can touch on that. And one thing I can preface with is I was down at site with yourself a month or two ago, and we wrote a research note on that site visit, just talking about the many things that Andean has done and is still doing to optimize that mine further. But maybe you can just touch on that, JC.
Yeah, thank you. So we bought that mine for several reasons. One of them is the strong exploration potential that we see on that mine. Last year, we started that exploration campaign. We allocated a couple of $1 million. So far, we've already made 3 announcements to the market, all of them confirming very positive results. We have 2 rigs running, as you say, Ben. We were there, and that plan is going extremely well, I would say. The results we're getting are very encouraging. So what is the expectation is that I would say sometime during the first half of next year, our intention is to present a new technical report, hopefully showing the extension of the life of mine of Golden Queen. I think that's probably right now the biggest near-term catalyst for the company. But as I said, the results that we're seeing and what we've already announced to the market, they're very, very encouraging. So we're very happy with the results. That's on the exploration one. And then on the actual operation, we when we bought the mine, we knew we needed, first of all, to invest. We've already spent last year 30 million, around $30 million into Golden Queen. Around $20 million will be spent this year. So within 2 years, more than $50 million are being spent in CapEx. But I think, for example, we brought a specialist to check up on all the mobile equipment. So at the end, it was decided to replace completely the whole truck fleet. So right now we have a new fleet of haul trucks, loaders, and so on. So there has been a lot of investment, which will ultimately, we believe, it should translate into a more reliable operation, more reliable production profile, and even better margins, right? And also on the more into the operation, we have a very detailed mine and plant optimization plan underway. There is a new block model that we're working on. So, I mean, there are a lot of different things that we're working on, but ultimately, like I said, I think the 2 main catalysts is to extend the life of mine, the Golden Queen, and improve the overall margins, right?
Yeah, well, no, and that's great. And I think one piece of context is a private company doesn't get any value by having a life of mine that's 20 years. And so they're not spending a whole bunch of capital into drilling and exploring for something that they're not going to mine for 15 years. Whereas in the public markets, they want to see that long life, right? And so that's where you guys are,
That's
having those
correct.
two drill rigs turn, look to update the resource, and I imagine in a year and a half or 2 years from now, you'll look to update the resource further, as further define the model there. And then, yes, in terms of operational efficiencies, I imagine there was a ton of low-hanging fruit over the last year or so. And then there's certain, and we talk about it in our research note as well, so we won't get into it, but there's a whole bunch of other initiatives that you guys are working on. Um, some nitty-gritty, nerdy mining stuff that I might only care about, but it is certainly an opportunity for the company to not only keep those margins high or grow them, but also even there is, some percentage points on increase production, right? And that's where investors, could see some upside on that as the years go on and as you optimize the project further. Um, so great on that. Just moving into the management team, maybe you can just touch on that for the people that don't know. Little update for investors on what the team looks like, the skill set, and then we'll talk about as well the ownership structure. I think it's good to highlight that as well.
Yes, thank you. I think we've been spending a lot of time and money bringing the right people. We have a new president. He used to be a former he used to be a board member. His name is Johan Bouchard. He was former CEO of Yamana Gold and New Gold, so someone with years of experience. So we're extremely happy that Johan ultimately joined the company as the president of the company. We also have Marcos Holanda. He's our new it's been already about a year or so. He's our COO. Actually, I think he used to work with Johan as well, but same thing, a guy with 30, 40 years of experience having worked all over the place. So yes, we have been reinforcing mostly our technical team. We're very happy to have Johan and Marcos. So I think we needed to spend a little bit more time on reinforcing that technical
Mm-hmm.
side of things. uh, I guess, I think you want to talk a little bit about the shareholder structure
Mm-hmm.
because we're very unique from that perspective. But I'll let you.
Yeah, well, no, please take it away, JC. You can, if you can
Yeah,
touch on that, please.
sure. Because thank you and thanks for raising that because we're a very unique company from the shareholder standpoint. We have a very tight shareholders structure. Our founder, who is still the executive chairman of the board and CEO of the company, so a person that's very much involved in the day-to-day operations of the company, he still owns around 54% of the company. Eric Sprott, who you all know very well, he owns another 15%. So between the two, they own almost 70% of the company. Honestly, I think that's a very strong argument. As a minority shareholder or a new investor looking at our company, to say that the two largest shareholders are so vested into this company, I mean, they're not going to let this company down, right?
Mm-hmm.
And that's why I say if you look at compare ourselves to many of our peers, most of our peers are very diluted, right? Nobody owns more than, I don't know, 5% of the company.
Yep.
We're very unique from that perspective, and I honestly think it's a very strong argument, right? Again, to say two strong shareholders are so committed, so vested into this company that, they're not going to let this company down.
Mm-hmm. Mm-hmm. Well, and think about the value that Alberto has created over the last few years for the other
Yeah,
shareholders.
absolutely.
He's certainly done a good job. Um, yeah, so then I just wanted to sort of close the whole sort of, vision of the company, and you can sort of talk about that vision, but obviously San Bart acquisition, build out the model, distressed asset, start cash flowing, etc. Then Golden Queen, highly accretive acquisition. You mentioned the timing couldn't have been more perfect. You might not get an opportunity like that in this market with metal prices rising so much, but um, you also announced recently a $200 million base shelf prospectus. So can you just touch on that as well as the vision going forward around acquisitions, and the company continuing to
Yeah,
take advantage of this momentum.
sure. The base shell perspectives, we did it just, in case something comes up and being ready, right? But so this is where things stand. The company is very well positioned to keep growing both organically and through an M&A deal. Organically, at Golden Queen, like I said, improving our overall operation, extending the life of mine at Golden Queen, which is, I would say, one of our main catalysts right now. In San Bart is continuing to secure more contracts, which we are, right? Feeding the plant with better ore, and we are doing that. So we still have a long way to go, keep growing organically, but also inorganically. I think we're very well positioned. Why? Because we have cash. We have, like I said, we have $120 million in cash and cash equivalents. Our intention is to be looking for a project that would double my production. I think that on a gold equivalent basis, we're producing a little over 100,000 ounces. I think there are some very interesting projects that we're looking at. What's very important, Ben, is that we also understand where the market is, not just looking at the assets, right? The market is changing, right? There's more access to capital. We have to acknowledge that as well, be realistic as to what we can accomplish. But I believe we are very well positioned because a lot of our peers, they do have cash, but a lot of them they don't have the cash we have, right? So it puts us at a good place on a negotiating table. So that's the plan. Again, we'll keep growing organically, and yes, there is an expectation, and it is our intention to make another acquisition. What are we looking for? Well, our intention would be to keep, focus on gold and silver. For location wise, I mean, we'll look at everywhere. Our preference would be the North American market. Why? Because we already have an asset in the US, so it makes sense to look for synergies there. But that does not mean we'll not look at the US, Canada, and certain places in like Mexico and to some lesser extent South America. We don't know. We'll look at everything. If there's a good project, we'll look at everything,
Yeah,
right?
yeah.
So that's the plan. That's why I think we're the company is in a very good position.
Mm-hmm. Mm-hmm. No, certainly I think it's smart to keep, all your options open, but obviously discount certain areas that might be riskier from a jurisdiction. But if it's a better opportunity, then maybe that's the one that you take advantage of. So certainly looking forward to that if anything does come to fruition. But in the meantime, you guys have been cash flowing heavily over the last several quarters here, and I imagine that's only going to continue with where metal prices are today, and how these operations have been performing as of late. So, with that, JC, not sure if you have any other closing remarks you'd like to add. Um, Feel free if you do.
Thank you. I guess the last question, a lot of people were asking us about Bolivia, and there's a new government. How do we see that? I guess first of all, like we've always said, we'll always work with any government. We worked with, the previous government, and we'll be working with this government as well. But yeah, the outlook for Bolivia is quite promising. There's a new president. He has said he's more open to foreign investments, more, expand the mining industry. He's already mentioned he plans to cut some taxes, things, improve the landscape, right? So I think there'll be good things to come from Bolivia, and the outlook is pretty good. We're very, very happy with our operations there. We're very proud of what we do. We contribute a lot to local communities in Bolivia, and we have great, relationship with Comibol, with the government. So it's good to be in Bolivia right now. So
Yeah.
yeah.
No, I'm glad you added that, and I think maybe what I'll add to that as well is that your business model also is very attractive to a government because it's not like you're one entity that is
Yeah.
benefiting solely from that one project. You are actually, adding value to all these different surrounding communities from all the different third-party providers that you source your ore from. And so it's this sort of network effect that you've been able to, and as well, legitimize those businesses, many of which previously may have been, um, doing some shady things, whereas with you guys, you're able to legitimize that business, and quite frankly bring a lot of value to those surrounding communities and groups. So with that, JC, appreciate the time today. Thanks for giving us that update. Lots of exciting things ahead for APM. And, it's been a great year in 2025, and I imagine it will be in 2026. So exciting times ahead. We wish you best of luck. And for those that haven't seen our research on Andean, you can find it all on our website at atriumresearch.ca, and follow along that way. So JC, thanks again for your time today.
Thank you, Ben.